Hi, I'm Pattu from freefincal. Aditya has an interesting question. He wants to know what investment strategy should he use if he can invest 50k a month. Well, the amount of money available really does not matter to decide the investment strategy, but he has an interesting point. He says that he likes index investing, he also likes low volatility investing, that is, low volatility stock investing, regular viewers may know, and he wants to know whether he can use a 90-10 approach, that is 90% of index investing, passive investing, and 10% of low volatility stocks. Now, this is a interesting question because many people either do this or want to do this, that is, and they label it like a they give it a fancy name like core approach and satellite approach. So they say that, look, I want to invest in mutual funds, that's my core strategy, and I will use I will trade for 10% of my net worth or 5% of my net worth, another 5% I will put in crypto or something like that, some kind of fancy idea. Of course, low volatility investing is much less fanciful than others like trading or crypto investing, but I would recommend not to do it. Now, I started investing in low volatility stocks only after I became financially independent, after my goals, most my long term goals were achieved. And like I said, my goal is to build a diversified retirement portfolio which can, and the stocks can give me income and so on. And I did it at a time where, at a much later stage in my net worth than what Aditya is asking. And therefore, I would recommend not to do it. I would recommend stick to simple passive investing. Focus on, leisure. Focus on doing nothing, staying healthy. That'll, follow creative pursuits, read, get new ideas, do whatever that makes you get new ideas, or something like that. So eventually, all that will lead to better health and probably better income, higher income down the line, instead of having a core and satellite strategy. Because the satellite approach, although low volatility investing is low maintenance, generally, relatively speaking, it still requires some effort. It still requires you to look at the stocks, worry about the weights, etc., and so on. So I would recommend not to do it, because a core, a satellite component of the portfolio would require a core amount of your free time. That is, it will take away much of your free time, which you can use in a much better ways. And health and higher income is a much better way to increase your net worth than fiddle around with fanciful investment ideas. So I would recommend everyone to not follow a core and satellite approach. Just follow a satellite approach, set that in autopilot, and do something else productive with the rest of your time. Of course, the core approach, the most ideal core approach would be passive investing. If you are an active investor, that's also fine. It doesn't take too much time to be an active mutual fund investor. Active stock investor may require a little more effort, but depends on how your investing style is. But in general, I don't like this core and satellite idea. I would suggest to Aditya, be 100% passive investor and enjoy the rest of your time.